Today, Shanks Group plc reports preliminary results for the year ended 31st of March 2012. Joining me here at the London Stock Exchange is Chief Executive Peter Dilnot. Good morning, Peter.
Good morning.
Peter, you've been CEO for just a few months now. What's your assessment of this set of results?
Overall, I'm very pleased with the results that we've announced today. I think it represents a really robust performance in challenging market conditions. The business has grown 3% overall, and profit before tax is up 8% at constant currency. That's driven by strong performance in our UK business and in our organics business line, and we're seeing continued strong returns from our investment programme, meeting our target post-tax returns of north of 12%. Also, the UK municipal business margins are improving as that business continues to grow. Cash generation continues to be solid, and our balance sheet is strong with net debt to EBITDA at 1.7 times. So overall, I think a solid and robust performance, and with the strategic investment programme generating returns together with management actions driving continued profitable growth.
So as new CEO, you've given me there your initial assessment of everything, but do you plan to make any substantial strategic changes?
Well, I came to Shanks because I believe it's a strong and well-positioned business in an increasingly important and growing sector. And what I've seen since being in the group strongly reinforces that view. Our strategy is really to be the leading provider of sustainable waste management solutions in our target markets. And I think that makes sense, both in terms of the underlying growth drivers and also in terms of Shanks' capabilities. So our strategy will remain very much intact. But what we are doing is we're increasing the pace and the quality of our execution and really driving the business harder to deliver continued growth.
Benelux generates around 70% of group revenues, yet faces severe pricing pressures and macroeconomic sensitivities. How will you drive group performance to combat these downward pressures in what is essentially your largest market?
Well, the first thing is to face the reality that you've just described, and the markets are tough, but they have been for some time. And the group has already delivered 50 million of cost savings over the last 3 years. I see an opportunity to continue that, and we will be upping the pace in terms of actively managing the group in terms of synergies and costs. Now, in parallel with that, we're investing in strategic projects, and that programme is generating returns that are outside of that very challenged macroeconomic linked business in the Benelux.
You've increased the focus on organics. How much more can we expect to see?
Well, organics is an incredibly exciting space for Shanks. Essentially just making green energy and organic fertiliser from food that is thrown away just makes sense and also can generate good returns. The business has grown. If you think 3 years ago, it contributed 4% of Shanks' trading profit. In the year that's just gone, it's 8%, and we'll continue to drive growth in this area. As the business scales, we're introducing processes and structures to make sure we continue to deliver, and our investment programme is absolutely aligned with that, with around 60% of what we're spending on growth going into this space.
Shanks lost several UK PFI bids recently. Is there an issue with the way that you approach these bids?
No, is a simple answer. And to put it into context, these are highly competitive situations against some strong players in the market. We were disappointed to lose, but I've looked closely at those bids, and there's nothing structural in terms of the way that we approach them. I think, furthermore, we maintained a disciplined approach to the submissions. Now, I think I'd just make a couple of points around this. The first is that our UK PFI business is performing very well. Our margins in PFI this year are up to 10% from 6% last year, so good gains there. And we're making good progress on the contracts that we have in our pipe. The other point I'd make is that the space is evolving. And we still see significant growth areas for Shanks as the UK moves away from landfill, and a lot of authorities still haven't solved that problem. And we're well placed to meet that in the space that's evolving.
Some investors might say that the group is too complicated, with too many moving parts to allow for a confident assessment of the investment case. Do you agree with that? And how can you simplify that to make Shanks a more attractive investment?
Well, Shanks' strategy is essentially a simple one in that we make more from waste, essentially deriving valuable products from material that's otherwise thrown away. Now, I think we have made some good progress in simplifying our activities, and we're increasingly doing that by a focus on 4 activities. That's solid waste, hazardous waste, organics, and our UK municipal business. Now, each of those business has their own demand drivers and their own economics, and we're managing the business accordingly. The mix is changing over time, reducing our cyclicality, and also meaning more of the business is linked to long-term contracts. But I think articulating the strategy is one thing. What counts for me is delivering it and ensuring that we do exactly that.
With the share price treading water and your CFO leaving now, isn't Shanks in a pretty vulnerable place?
Well, firstly, we're very sorry to see Chris move on, but it's an exciting opportunity for him personally. And of course, he's staying with us until the end of the summer. We have a strong operational and financial team at Shanks, and it's very much business as usual. We also have a clear path towards delivering shareholder value from our investment programme and actively managing the business. And that's what we're focused on, the execution of that strategy.
Historically, Shanks has been perceived to underperform. Are you confident that the current investment plan can continue to deliver on its targeted returns?
Yes, I am. And I think it's also important to recognise that Shanks has delivered another robust performance this year in some challenging market conditions. The increase in the dividend, I think, is reflective of our confidence going forwards, and we're in line to deliver against the board's expectations for this next financial year. I think beyond that, the outlook for Shanks is very promising.
Shanks Group plc Chief Executive Peter Dilnot, thank you very much for joining me.
Thank you.